Buy the dip in NIO stock or save your money for that Rivian IPO. Talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. It is time to talk about a NIO Incorporated, ticker symbol NIO. Well, this company just reported their earnings. We'll get into them. We'll take a look at their Q4 revenue guidance as well, which is, I think, dropping the stock in the after hours. We're seeing the stock trade off by about 7% in the after hours. We'll talk about what this means from a technical perspective. We'll go over all the numbers as well. I think there's some key numbers in here. And I hate to compare every electric vehicle stock to Tesla, but there is one particular thing that NIO does that Tesla does completely differently than they do. And so we'll talk about that as well. And then we got to talk about Rivian coming public, I think sometime this week, north of a $70 billion valuation. We saw Tesla stock actually trade off quite a bit today. It could be that investors are just starting to put aside some money for that hot IPO that is scheduled sometime very soon. Now, NIO came in with their vehicle sales at $1.34 billion. That's up, just 102% year over year. They had 100% delivery growth on their vehicles as well. Now, what I'll talk about here in a second is vehicle margin came in at 18% versus 14.5% in the previous quarter, but we were sitting at 20% vehicle margin in the second quarter. I'm going to show this to you here as well. It's actually the second line, basically, of their press release. They go vehicle sales, then they go vehicle revenue, and then they go vehicle margin. Okay, this is a very, very important stat. And we do see that year over year, it did go up 350 basis points from 14.5% up to 18%. But we are down quarter over quarter on this vehicle margin, 20% down to 18%. Now, I told you there was a statistic from Tesla that I was going to compare NIO to, and I want to show you this. And the craziest thing is this is near the bottom of Tesla's press release. And I tell you what, as an investor, I think I find the best information near the bottom of financial reports. Take a look at this. This is automotive gross margin excluding regulatory credits. Okay, this is a non-GAAP figure, but Tesla is showing you they do get some regulatory credits, and they do that does bolster their automotive gross margin. But let's strip those out because I don't know. I'm not familiar with NIO enough, but I doubt they're getting a lot of regulatory credits. Maybe they are in China, but we'll strip that out for the certain degree. Look at where Tesla is on their vehicle margins. In the most recent quarter, I was blown away by this number. 28.8%. That's way higher than where this company has normally been. Now, they've been in that 20% range, and quite frankly, I would not be excited about NIO unless they can consistently maintain this 20% vehicle margin. But we're seeing now they're at 18%. That is 10 basis points lower than where Tesla is, and that is worrisome considering Tesla sells cars in NIO's market. Now, the other thing, quite frankly, I don't think this is sending the stock down. Obviously, revenue growth and vehicle sales up north of 100%. Not likely sending the stock lower, but what I did notice is their Q4 outlook, which is the quarter upcoming. They're expecting revenue between 1.46 billion and 1.57 billion. That should be higher than we were in the most recent quarter, but I did notice that deliveries are going to come in between 23,500 and 25,500 cars, and that could be on that low end of guidance, could actually be below where we were in the most recent quarter. Now, NIO is blaming it a little bit. They have some supply chain volatilities, which we'll give them credit for, but they're also retooling for new products, new cars, new versions of their cars. So we'll give them, a little bit of a pass when it comes to some of those things. Now, what we won't give them a pass on is when we come over to these financials over at NIO. We've got our revenues here, total revenues. Now, here's the thing about these Chinese companies. So you've got the right-hand column in United States dollars. Everything else, unfortunately, is in the renminbi, which is the RMB currency that NIO deals in. Okay, now, so unfortunately, I might confuse the two by saying dollars. I want you to keep in mind that the right-hand column is in United States dollars. Everything else is in the Chinese currency. So we had total revenues in the quarter coming at $1.5 billion, 9.8 billion Chinese RMB, and that is up again 100% year over year. But what I also want to show you is our total cost of sales also ticked up dramatically, okay? So yes, our gross profit went up quite a bit. We went from 585 million RMB up to 1.9, nearly 2 billion RMB. Look at what happened to our operating expenses, okay? Total operating expenses grew from 1.5 billion up to 2.9 billion. So our loss from operations over at NIO, despite 100% revenue growth, okay? We had a loss from operation that equaled where we were a year ago. Notice this, that we lost 945 million RMB. In the most recent quarter, we lost nearly a billion. That is nearly $154 million loss in the most recent quarter. Now, a quarter ago, we lost 763 million RMB. So this is a company that's losses are starting to expand, in part because their margin is starting to contract. When you see a company start to lose margin, what it tells me that competitors like Tesla, who compete in the exact same market as NIO, where they're expanding their margins, it's telling me that consumers are willing to pay more and likely prefer Tesla to a certain degree over at NIO. So NIO has to cut prices in order to maintain the number of deliveries that they promised to investors. Not necessarily something that I'm really concerned about over the longer term over at NIO, but it is something in the shorter term they will likely have to solve in order to maintain this lofty 69, nearly $70 billion valuation, which ironically enough is about where Rivian is going to go public. Boy, it might make NIO's valuation look really good here in a couple days. We'll see how. I tell you what, this Rivian IPO is going to take up a lot of wind in the EV space, and I think it can do one of two things. It could potentially send these stock higher as people evaluate how much people are willing to give this truck maker without a lot of trucks or many trucks or any trucks literally on the road today in consumers' hands. It might make people reevaluate NIO and willing to pay an even higher multiple than where the stock is. Now, the other side could potentially be true as well. Like I said in the beginning, that people might be saving their money or building capital or allocating capital to Rivian by taking it out of NIO, taking it out of Tesla, which dropped nearly 11%. Those are things we're going to have to monitor over the next couple days. Now, from a technical perspective over at NIO, something is extraordinary. Actually, two things are extraordinarily obvious. We topped out back here in February, like a lot of high-flying stocks. Actually, a lot of stocks topped out here in February, and now we are making a succession, it appears, of lower highs. So we were up here at $64 per share. We bottomed here at 54, and now we're down here. It looks like this stock is turning a corner here at $43 per share. Again, unless sometime this week we maybe get news out of NIO or potentially the Rivian IPO, like I said, makes investors reevaluate the multiple they're willing to place on a stock like this. Now, I'm going to take this downward trend line out because I think that is crystal clear. The other thing that comes crystal clear is we're absolutely stone cold range bound on this stock. It is range bound between $32 and $54 per share, give or take $1 or $2 on either end. This stock looks like, to me, it wants to come back down here and retest this area south of $34 per share over at NIO. Now, traditionally, over the past year or so, that has been a buying opportunity, but we could pull up a chart like PayPal and notice what happens when you break an area that has held for a year. Well, typically you break hard and you break very, very fast. And so potentially that same setup is occurring with NIO. So when I say, hey, this is a buying opportunity, I want you to understand that that is based on what the technical analysis has projected in the past, that this $32 level has held once, twice, three, call this 4 times, and maybe potentially a 5th time. But understand, just like PayPal gave us a perfect example of, that $225 level with PayPal held basically 5 times as well. But when you break it, it signals to all kinds of computer algorithms and even human traders that, this area has completely broken down and we are headed lower on NIO. And now the very, very bear case scenario is that you could come down here to about $20 per share. I think you do have a little bit of price action here, but you got a little bit of a gap down here as well. If you get south of $26 per share on this one, well, I tell you what, it's almost guaranteed that you'll come down to about $20 per share. Now, the bull case scenario is, like I said, in the very short term, we reverse course very quickly here because of the Rivian IPO. Lets people reevaluate the multiples that they're willing to put on these kind of, I don't want to call NIO kind of an upstart. They're doing a lot of stuff in terms of deliveries and the quality of their car, but it could be that investors reevaluate the multiple on this one. That could send us back up in the shorter term, and that could send us back up into about the $52, $53, $54 range, where again, I would expect sellers to come in at this point because that's where they've been over the last year. Now, more likely, I think, is we come down here, we retest in the $34, $32 range, and then we see if that level holds. If you do step in at this lower range, keep in mind you might want to stop loss on this one, maybe about $30 per share, because if you break $30 per share, this one's coming much, much lower. The other thing you could do is very, very gently come in here at $31, $32 per share, and then go look at for evidence that we've done a reversal, okay? You can look at the 4 or 5 times that this stock has hit this $32 level. When it made higher highs just a couple days later, that was a signal that this stock had bottomed at this level. You could nibble down here, maybe wait for confirmation and buy again and rally this one all the way back up, potentially back up to $54 per share. That was NIO. Let me know down in the comments what you think about this one. I'd love to hear them. Hopefully you guys are having a great day out there. Good luck with your investments.